Hello everyone, welcome to BISP Solutions. BISP Solution is a tech company that provides technical solutions across the world. So today's webinar's agenda is based on NetSuite functional application major parts. So for today, we will be taking topics like making journal entries in NetSuite application, then making accounting periods, then setting budgets, then making chart of accounts, then currency exchange rates we will be learning here, and we will be learning more about employees option which is available in NetSuite, and items and bins will be there. So starting with our journal entries making, so we will be going directly to our NetSuite application, then coming to transactions tab, then scroll down. Here you can find financial option, then you can click on make journal entries option, then you have to just click here. So as of now I am taking journal entry, like 1 second. We will be taking journal entries as advertisement account debit to purchase account. We are writing another thing because we have to want to see what will be the journal entries, and let's suppose advertisement cost us rupees 4000 rupees, and same will be coming in credit side also. So what will be the entry for if there is any expenses in advertisement, so or goods given as a freebie, so it will be like advertisement account debit to purchases account. So keep this in mind, and we will be doing here, as I already told everyone that reversal journal entry, if you want to like reverse any journal entry, you can just set the date here, and on that particular date the particular journal entry will be reversed. Then here you can see account, where it is mandatory to fill up. We will be clicking on account, then arrows, downward arrows here, and here we will be getting list option, so we will be clicking on that. So in list option we will be getting all the options which we want. So we want purchases, so let me search here. So as you can see, there are three types of purchases account. So first is account number 5000, 500,002 and 5004, which is a service and merchandise. So we will be selecting 5000 purchase here, but it is a credit entry, so we will be just deleting it. We will be searching for advertisement because it was on our debit side. So advertisement is not there, so we have to make a new advertisement account here. So we will be clicking on add tab, then here we will be giving number as 57, and we will be making it different, like this, and it's a expense for us, so it will be like this, and it will be in India. So saving this particular thing, and here you can see account is added. Then we will be writing down the debit entry and also purchases. Here you can see 5000 purchases. You can just click on here and drag it, so it will be like this, and click on add option. Here you can see advertisement account debit to purchases account, and then you just have to click on save option. Now after saving this journal entry, you will be getting an option that your journal entry is made. So just 1 second. Excuse me. So we will be getting our journal entry with the number of 59, and we will now see the GL impact of the same. So we will be clicking on actions option, then going down to GL impact, then clicking on GL impact. Excuse me. So here you can see 57 advertisement expenses which we have made, and amount debited is 3,35,440, and purchases will be the same, 3,35,000. Why it gets changed? Because it is converting in dollars. So currently the exchange rate is 83.86, like 1 rupee is equals to 83.86. So $1 is equals to 83.86 rupees. So it is converting like this. Then we will be seeing that where it will be reflecting. So in under reports tab, in financial option, we will be going to general ledger firstly. So we will be noting down where we are going. First step is general ledger option, where we will be checking this particular entry. So today's is around 21-22, and we will be selecting the date range, and we will refresh it here. First we have to check what was the journal name. 59. Okay, so going back to our reports, financial and journal ledger, 59 number is our journal entry. So 1 second. As it's a test environment, it will take time. So let me just check, is it reflecting here or not. So as of now it is not reflecting in journal ledger. So just going back to our financials, then clicking on balance sheet or trial balance. First we have to see, so checking here, so we'll selecting here. So here you can see 57 advertisement expenses account 3,35,440 rupees. Okay, in trial balance it is showing. Then we will be going to our balance sheet, selecting the same date range which we have selected yesterday, selecting it to July 22nd, and then refreshing the same. Advertisement expenses, 1 second. Cash account will show all the entries which are made under for cash account. Okay, then so advertising expenses, which is mainly be looking in prepaid expenses. So just checking the detailed report here. Excuse me. So it is not showing here also, and 1 second. It is not showing here. So as we can see, we have made this journal entry, and we have seen journal ledger option, balance sheet, trial balance, cash flow statement is remaining, so we can check there also. So when we are making any journal entry in NetSuite, we have to check our journal ledger option, balance sheet, trial balance, cash flow statement, just to get a knowledge where all the entries are showing in our NetSuite application. Okay, so coming back to our PowerPoint presentation, we will be next discussing on accounting periods. The journal entries are already made here, so we don't have to go there. I hope I made you understand what to be done for making journal entries, and where you have to see all the entries or the postings. So in accounting period, so accounting period is basically accounting period in NetSuite, accounting periods are used to organize financial data by time periods, facilitating accurate financial reporting and compliance. They represent the time intervals such as months, quarters, or years during which excuse me, during which financial transactions are recorded and reported. So some key concepts are: first is fiscal calendar, which defines the structure of accounting periods. It can be set up based on to standard financial year, that is January to December, or a non-standard fiscal year, which is April to March. So in US, US, the financial fiscal calendar is January to December, and in India it is like April to March. So in accounting periods there are types of there are many types of accounting periods. First is base periods, which means the primary period, example months within a fiscal year. Then second is adjustment periods, which is the special periods used to record adjustments after the base periods have closed. Then quarterly periods, which are the groupings of three basic periods, that is quarter 1, quarter 2, quarter 3, etc. Yearly periods, it means grouping of all base periods within a fiscal year. Next is period close. So in accounting period close means the process of finalizing all transactions for an accounting period, ensuring that all the financial data is accurate and complete. Once a period is closed, no further transactions can be recorded in that particular period. Excuse me. Examples, like if we are selecting standard fiscal year, so base period will be January, February, March, etc. up to December. Then quarterly periods will be January to March, April to June, July to September, and October to December. It will be bifurcated like quarter 1, quarter 2, quarter 3, and quarter 4. Then yearly period is January to December. If we are selecting non-fiscal calendar, so the base periods will be April, May, June, July, etc. Quarterly periods will be quarter 1 April to June, then quarter 2 will be July to September, like that. Yearly periods will be April to March. Then adjustment period, if we are selecting adjustment periods we want, so suppose a fiscal year ends in December, an adjustment period can be created for January of the following year to record adjustments related to the previous year's transactions. So understanding and properly managing accounting periods in NetSuite ensures accurate financial reporting and compliance with accounting standards. Coming to our next topic, which is budgets. So in NetSuite, budgets are used to plan and monitor financial performance by company, actual financial results against predefined targets. Budgets can be set for various time periods like monthly, quarterly, annually, and across different dimensions such as departments, classes, locations, and accounts. So some key concepts are budget categories, which are used to classify budgets. Like common categories include departmental budgets, project budgets, and company-wide budgets. Then budget records. These records contain the budgeted amounts for specific accounts and periods. They can be created manually or imported from external file. Then budget versus actual reporting. NetSuite provides reporting tools to compare budgeted amounts with actual financial results, helping businesses track performance and make informed decisions. So, properly managing budgets in NetSuite helps organization plan effectively, monitor financial performance, and make extra data-driven decisions to achieve their financial goals. Then we have learned about our chart of accounts in first class. So chart of accounts is in NetSuite is a structured list of all the accounts used in the company's general ledger. Each account in the COA is assigned a unique identifier and categorized based on its type. Example: asset, liability, equity, revenue, or expense, enabling accurate financial tracking and reporting. Some key concepts of chart of accounts is: first is account types, which includes assets, liability, equity, revenue, expenses. Next is account numbers. Each account in the COA is assigned a unique number or code for easy identification and reference. Hierarchy. Accounts can be organized hierarchically with parent and child accounts to provide detailed financial reporting. Parents' accounts are summary accounts that aggregate the total of their child accounts. So, managing the chart of accounts in NetSuite ensures accurate and organized financial records, facilitating effective reporting and decision making. Then coming to our next topic, which is currency exchange rate. In NetSuite, currency exchange rate are used to convert amounts from one currency to another, enabling businesses to manage multi-currency transactions. Exchange rates are essential for accurate financial reporting, particularly for companies operating in different countries or dealing with international clients and vendors. Some key concepts of currency exchange rate is: first is exchange rate types, where average rate is over a specific period. Spot rate is the exchange rate at a specific point of time. Historical rate, the exchange rate at the past date used for historical transactions. Then currencies. NetSuite allows you to set up multiple currencies and manage exchange rates between them. So each currency has standard, which is ISO code. Example: USD for US dollar, EUR for Euro, like this. Third is currency exchange rate record, which means it records store these records store the conversion rates between different currencies. Exchange rates can be updated manually or imported from external sources. So, managing currency exchange rate in NetSuite ensures accurate financial reporting and smooth handling of multi-currency transactions. Next is the employees in NetSuite application. So in NetSuite, the employee record are used to manage and track information about employees within an organization. So employee records store various details such as personal information, job roles, compensation, time tracking, and performance data, making it easier for HR and management to handle employee related issues. So key concepts were: employee record, a detailed profile for each employee containing personal employment and compensation information. Roles and permissions is employees can be assigned specific roles that determine their access to different areas and functionalities within NetSuite. Third is employee center, where a self-service portal where employees can manage their personal information, submit time entries, request time off, and view pay stubs. So managing employees in NetSuite with detailed records, roles, and the employee center ensures efficient HR operations and empowers employees with self-service capabilities. Excuse me. Then coming to our next topic, which is based on items. So in NetSuite, items are the products or services that a company sells, purchases, or tracks in inventory. So they are fundamental to various business processes such as sales, purchases, and inventory management. items can be categorized into different types based on their natures and usage. So item types are inventory items, where you can store physical goods that a company buys, sells and keeps in stock. Non-inventory items, goods or services that are sold or purchased but not kept in inventory. Example, services, digital products. Service items, service provided to customers. Example, consulting, which we do, and maintenance. Assembly items, which are finished goods made from combining multiple inventory items. Kit or package items, group of items sold together as a single unit. Then other charge items, which are miscellaneous charges like shipping or handling fees. Gift certificates, which represent a value that can be redeemed by the holder. All these come under item types. Then item records, it is a detailed record for each item containing information such as description, pricing, cost, inventory levels and related accounts. So, managing items in NetSuite ensures efficient tracking of products and services, accurate inventory management, and streamlined transaction processing. Excuse me. And the last topic is bins. So, in NetSuite, bins are used to organize and manage inventory within a warehouse. They represent specific physical location within a warehouse or storage facility where inventory items are stored. Utilizing bins helps improve inventory accuracy, streamline picking and packing processes, and optimize warehouse space. So key concepts are bin management, where it enables tracking of inventory items down to specific bin location within a warehouse. Each bin is assigned a unique identifier and associated with a specific location. Next is bin records, where details store details about each bin, including its location, description, and the item stored within it. Next is bin transfer, which allows for the movement of items between bins to ensure accurate inventory levels and efficient warehouse operation. So by using bins in NetSuite, businesses can effectively and efficiently manage their warehouse operations. So it improves inventory accuracy and enhances the overall organization of their storage facilities. So as of today, these are the topics. Tomorrow we will be learning about all the workings of items and bins and currency exchange rate. We will be learning tomorrow. So thank you so much for joining us today. We hope you found this session valuable and that you are excited to implement what you have learned today. So tomorrow we have another exciting session planned, where we will dive even deeper into our NetSuite application, sharing more tips and strategies to help you maximize your success with NetSuite. Until then, keep exploring, keep learning, and we can't wait to see you back here tomorrow. Have a fantastic day.